I am off leading a seminar right now, so here's some clips from Michael Saylor coming at you. I'm doing a seminar over here, and enjoy Michael Saylor today. See you on the other side.
You can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the US begins to acquire that network. As digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever. I've been watching the industry for the past 4 years or so. And I think there's been a lot of confusion, a lot of controversy, a lot of conflict, and confrontation that was all unnecessary. And it was unnecessary because of a sort of a lack of vision and a lack of creativity amongst the policy makers and the participants. So, for example, in a world where the only assets that exist are securities and commodities, and in a world where it's impossible for any innovator to issue a security, then everything has to be a commodity. And that means a token is a commodity, a currency is a commodity, a tokenized security is a commodity, and a commodity is a commodity. So what we had was people very confused, thinking, well, is Bitcoin a currency competing with the dollar? Or is Bitcoin something different, a store of value competing with gold? And then is Bitcoin competing with Trump coin or any other token or not? And what's the next Bitcoin? And so I think the crypto industry was at odds. A lot of people that want to be issuers of tokens are forced to go through this kabuki dance of pretending they're decentralized when they don't really want to be decentralized. What they want to do is access the capital markets, and they haven't had a way to do it, and we haven't had that discussion. So in my framework that I've laid out, and this is after hundreds of meetings and talking to people in the Senate, in the House, in the SEC, in the CFTC, in the White House, every industry participant, all the Bitcoin investors, all the crypto investors, all the crypto exchanges, all the policymakers. After lots of conversations and after listening to every word uttered by Gensler, by all the regulators, after listening to every minute of congressional testimony, here's my opinion. My opinion is the industry will move forward in a cheerful, constructive way with the greatest good done for the greatest number of people on earth if we define 4 new asset classes. And they would be a digital token, a digital security, a digital currency, and a digital commodity. And those 4 new asset classes would rest atop 3 20th century assets: securities, commodities, and currencies. So the right way to handle this is simply to say, we want to allow digital tokens to be issued by 400 million businesses, ideally in 4 hours for $40. Right? And what's the use case of a digital token? It's for capital creation and for innovation. So let Trump coin be issued, let Katy Perry token or Joe Rogan coin or any token, whether it's a smart contract token or a utility token or a meme coin, or maybe it gives me access to, to a music library on a website, or maybe it gets to be a hyper complicated, token or NFT, some digital utility or some right that just stops short of being a security. And there's 400 million people that want to do it, and they want to do it in 4 hours for $40. And the reason that they can't issue a security to raise capital is because securities take $40 million, an army of lawyers and accountants in 4 years, and then you got to pay $10 million a year to stay compliant. And so, and even after you do all that, securities would only trade 9:30 to 4 on a few markets. They don't trade globally, worldwide, 24/7. So tokens solve the problem of giving capital markets access to hundreds of millions of corporations. And that's a profoundly important thing. If you have no money and you want to start a business, or you're a podcaster and you somehow want to raise capital from your customers or from investors to change your business, or if you want to innovate and say, I'm going to have a podcast that has two layers of access, the free version and the tokenized version. If you buy the token, you get the inside scoop and you get the comment. And if you take the free version, you don't. So if you want innovation and you want capital creation, you need that. But you need a legitimate path to do that. I think that if you go to digital currency, the real point is an issuer, a corporation, whether it's Circle or Tether or a bank, ought to be able to issue a digital asset that's backed by currency. So if I want to sell $1 billion of digital stable coin, I ought to have $1 billion worth of currency in a bank. It ought to be 1-for-1 backed, right? And that's not the same as a stable coin. Like, it's not UST backed by Luna, right? It's not, that would be a token, by the way, right? If you create a token which you purport to be stable at $1, I mean, okay, you're kind of a fool to trust it. But if I create a digital currency, then I issue $10 billion and I buy $10 billion of treasuries, and it ought to be sort of a regulated entity. And the issuer ought to be liable to the government and ought to be liable to the buyer for fraud, right? And that's kind of very straightforward. But then the digital currency ought to circulate friction-free at the speed of light. And the benefit of that is that the stablecoin industry will go from 50 billion in the US to 10 trillion. And we will export $10 trillion worth of US dollars to the rest of the world. And probably everybody in Africa and everybody in Asia will start using the dollars. Maybe the Europeans will flip to the dollar, right? It would be great for the world's reserve currency. If you think about money, money decomposes into currency and capital. So if you live in Argentina and by law you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds. You might be holding corporate bonds. You might be holding treasury bonds. Or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company. Or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world. Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%. Right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17%. of that. And the primary competitors of the dollar are CNY, Euro, and JPY, yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money.